If you can give me just a few minutes, I'll show you one of the most powerful indicator-based strategies you've probably never seen before. I'm not going to waste your time. We'll get straight into how this tool works, how to use it effectively, and how to turn it into a high-probability trading system that can bring in serious profits if used the right way. So stay with me until the end, because once you understand this, your chart analysis and trade entries will never be the same. Let's get right into it. Alright, so I will be using TradingView throughout this video. You can use any market or time frame of your choice. The concept remains the same. To add the indicator, go to the Indicators tab from here. Search for SMI MFI. You'll want this one, the Stochastic Momentum Index of Money Flow Index, created by Andre 7. Add this one to the trading chart. Once you load it on your chart, it'll show up in the bottom panel. Now here's the genius behind this tool. It combines two powerful oscillators, the Stochastic Momentum Index, SMI, and the Money Flow Index, MFI. You already know SMI is amazing at tracking short-term momentum, and MFI shows us where the buying and selling pressure is coming in. Now imagine combining them. Instead of price being used as the SMI input, this indicator uses the actual money flow, giving you a much sharper and more accurate view of momentum. That's what makes this indicator stand out. So let's break it down. You'll see two lines, the main SMI MFI line and its signal line, which is just a simple moving average of the main line with a length of 8. When the SMI MFI line crosses above the signal line, that's a bullish signal, and the zone between them turns blue. When it crosses below, it turns red, and that's your bearish signal. There's also a histogram at the center that shows the difference between the two lines, like a momentum bar chart. Bullish bars go above the center, bearish ones below. The structure is very similar to MACD, but the data it's based on is completely different, making it much more sensitive to real money flow in the market. Now let's talk signal levels. If you're familiar with the standard stochastic momentum index, you know that plus 40 and minus 40 are key thresholds. This indicator keeps those levels in place using dashed lines. But it doesn't stop there. It adds dynamic bands that adjust to market conditions. You'll see these blue and red bands hovering around the plus 40 and minus 40 zones. When the SMI MFI line crosses above the top blue band, that's considered overbought, and a move back below it is a potential sell signal. When it crosses below the red dynamic band, that's oversold, and a bounce back above becomes a possible buy signal. Now, whenever the SMI MFI line goes into these extreme zones and then gives a crossover signal, the indicator marks them with colored dots, green dots for buy signals and red dots for sell signals. If the crossover happens within the middle of the range, not at the extremes, the indicator marks them with diamonds, blue for bullish, orange for bearish. These middle signals can still work, but the ones that occur beyond the dynamic levels have much higher accuracy because they represent actual reversals from overbought or oversold zones. But here's how you can boost the accuracy even more, by adding a trend filter. So we will add another indicator on our trading chart to complete our trading strategy.
Do you feel like everyone around you benefits from artificial intelligence, but you have no idea where to start? Don't wait any longer. Start today. Our free trading bot is simple to use, powered by artificial intelligence, and can earn you up to 1% profit every single day. Over 500 members have already joined. Click the link below now to get free access. This is your chance to harness the power of AI and take a step toward a financial boost.
So in the Indicators tab, search for the Pivot Point Supertrend Indicator. It is this one, created by Lonesome the Blue. Add that to your chart as well. Now, we're not using this for entry signals, just for trend confirmation. If the super trend is red, we only look for sell trades. If it's green, we only take buy trades. This avoids a lot of false entries. So here's how we use both together. When the super trend is red, we wait for the SMI MFI line to go above the dynamic blue band. Once it does that and crosses below its signal line, that's our potential sell signal. But we only confirm it if the line has also moved back below the dynamic band. That's when we enter a sell signal. Now here's a live chart example. Super trend is red. Down here, we can see the SMI MFI moves above the blue band, then crosses below the signal line and back under the dynamic level. That confirms the sell signal so we can take the trade. We can open a sell position here. The stop loss goes just above the super trend line or above the previous swing high, if that's closer, and our take profit is set at 1.5 times the risk. This strategy is very simple but accurate at the same time. This one plays out beautifully. Same process on the buy side. When super trend is green, we wait for the SMI MFI line to drop below the dynamic red band. Then it has to cross above the signal line and back above the red band. Once all that lines up, we take the buy trade. Here's a live example. Here we can see the super trend is green in color. The SMI MFI dips below the band, crosses back up, and closes above the red dynamic level. So our trade is confirmed over here, and we can open a buy position over here. Stop loss goes below the super trend line for a buy trade, or if it is too far, you can also go for recent swing low, and the take profit can be set at 1.5. Make sure that you don't enter any trade in which all the conditions are not completely fulfilled. If you can also add some price action knowledge with this trading strategy, you can increase the accuracy of the signals even more. Let's look at another buy trade example. As we can see here, the pivot point super trend is green, which means the overall trend is up, so we're only interested in buy setups. Now, if you look at the SMI MFI line, it dipped below the dynamic blue level. This shows us that price reached an oversold condition. A few candles later, the SMI MFI line crosses above its signal line, and then it closes back above the dynamic level. That's our confirmation. We open a buy trade at the opening of the next candle. Stop loss goes just below the super trend line, and take profit is set at 1.5 times the risk. After you have tested this strategy, you will realize that most of the trades will work out beautifully, as these signals we get are riding the momentum as the market pushed in our favored direction. A good tip here: whenever the SMI MFI line crosses back above from below that dynamic level and super trend is green, it's a solid opportunity to jump in with the trend, especially if it happens after a short pullback. Now, just like with any strategy, you'll still encounter some false signals. Sometimes you'll catch the very last move before a reversal happens, or the market goes sideways and the setup just doesn't follow through. That's normal. That's trading. You can reduce these kinds of setups by avoiding low volatility phases and watching for choppy price action. You can even use ADX or the Andean oscillator as a filter if you want. But even then, no system gives perfect signals. So yeah, that's the full strategy. Let me know if you have any questions in the comments. I always try to reply as soon as I can. If you found this video useful, don't forget to hit like and subscribe so you don't miss future strategies like this. Good luck with your trading, and I'll see you in the next video.